Welcome to FutureX, the podcast where we look to solve the variable that is the future of Web3. Every week, we'll talk with some of the brightest minds in the blockchain and Web3 space, from top investors to founders and builders, paving the way for a decentralized world. So what is the future of blockchain? What will Web3 look like in 2050? Let's explore together.
Welcome everyone to the FutureX podcast, where we look to solve the variable that is the future. We call it the FutureX. We're joined here by my co-host Matt from SynFutures and Jason Brannigan, investor at Woo Network. Jason, thanks so much for being here with us today.
My pleasure. Thanks for having me.
Welcome, Jason.
I think I might have mentioned earlier, but you're our first podcast guest, so really excited to have you here. No pressure, but we're looking to get some really interesting insights out of you. But let's start with a little bit of background on how you got into the crypto Web3 space and what your journey has been like so far.
Yeah, perfect. So I got into crypto originally in 2014, actually. I was studying monetary economics at university, and my professor brought up Bitcoin. And so that was when I first looked into it. I bought some Bitcoin around then. I think it was around $300 or something like that at the time, roughly. And then ever since then, I've kind of been involved in crypto, sort of on and off. So I completed my studies. I then got into traditional finance, managing a sort of $5 billion pension fund in 2017. And around the same time, just got involved in crypto more fully, basically, in my spare time. And then the last few years, basically it's been a second job to me, to the point. And then at the sort of earlier this year, joined Woo Network full time on the ventures team. So it's definitely been a big part of my life the last few years, and even more so now.
2014 that you started to buy Bitcoin at 300. Yeah. So you still holding those Bitcoins?
I don't actually think I am, to be honest. I think at the time I was a poor student, so that's why I'm probably not retired on an island right now. So yeah, I bought, I think, at $300, and then I think I sold somewhere around $1,000, and then thought I was a genius for a long time. But I never kind of abandoned it, really. That was like my first kind of interest in Bitcoin. And then ever since then, I've just kind of generally been involved with the system. So yeah, it was, unfortunately didn't have enough capital to buy all the Bitcoins at that time, but not doing too badly of it.
I remember my journey, my early journey into crypto actually started like almost the same time, but I remember I sold something at 300 back in 2014. Like you said, luckily I bought it back. Today, here we are.
Yeah, I also sold Ethereum around 800, and I was kicking myself for quite a while about that, but it looks like I'm able to buy back into, so. So Jason, like, what drew you to Woo Network, when you kind of started exploring like investing from a professional perspective?
Yeah, so I was a personal investor, not in the private rounds, but publicly in Woo, sort of early 2021, right at the start of the year, just before kind of the Up Only podcast, where I think Suzu mentioned Woo, and it pumped from something silly like 6 cents or 10 cents up to like 60 cents in like a few days. So fortunately, it was just before that time. And yeah, so it's a company that I've always been familiar with, always been very bullish on personally. I think they solve a really important part of the ecosystem, which is ensuring that there's liquidity for institutional adoption, and anyone can get instant and good execution on their trades. And then, so I met some of the team at the end of last year, and then subsequently had the opportunity to join Woo Network on the ventures team. So it's a bit of a dream job for me.
May we know a little bit more about like overall setup of Woo Network and Kronos together?
Yeah, absolutely. So Kronos Research was founded in 2018. And for those who don't know, they're one of the largest market makers in the space. I think during last year, we're sort of doing up to sort of $10 billion daily volume. One of the largest market makers on DYDX, for example. And then subsequently, the same founders founded Woo Network as kind of a sister company in 2019. And so Woo Network is essentially a liquidity network, which allows exchanges to kind of plug in and instantly expand their order book. And then on top of that, we have WooX, a zero fee exchange, and WooFi, which is kind of our DEX and swap feature. And there's several other kind of projects in the near future coming out, but WooDAO is another one where we have 300 million Woo tokens. And we look to distribute that and allocate that to really boost the Woo ecosystem. And so there's a lot of synergies between the two companies. And personally, for me on the ventures arm, it's perfect because we have, in addition to kind of the usual value add, we get very involved with our portfolio companies post-investment, helping out as much as we can. But then having obviously one of the largest market makers in crypto and a deep liquidity network behind you is always helpful as well.
The venture side, can you tell us a little more about kind of Woo's investment thesis? Do you guys consider yourself more as like a corporate VC structure where you're looking for strategic investments that complement Woo Network and Kronos, or do you approach it more as like a market agnostic kind of traditional VC style investing?
Yeah, so it's interesting and it's a good question. So it's given that Kronos and Woo are sister companies, I actually sit there's one ventures team, but we kind of represent both companies. So there's Kronos Ventures and Woo Ventures. Kronos Ventures is kind of, as you described, a more traditional crypto native VC. Obviously with the same kind of value add and strategic goals. But Woo Network and Woo Ventures in particular has a much more strategic focus and basically looks to purely invest in portfolio companies that can really help grow the Woo ecosystem specifically.
In terms of deal flows, what is your approach to attracting like some of the best founders to consider an investment from Woo? Is there anything you do on the community side that kind of helps bolster your venture investing efforts?
Yeah, it's a good question. I would say we try and let our reputation kind of precede us in that sense, where we're very much of the opinion if we put in as much effort as we can helping our portfolio companies and really adding value to them, we create the reputation that we want, which just naturally leads to more deal flow as founders recommend us and things like that. So that's super important. And then also with the introduction of WooDAO over the last few months, that's another area we're kind of investigating right now and really starting to develop in terms of getting our community involved with helping portfolio projects, whether that be through awareness, having them come in, present to our community, and then really having our community add value in different ways, so that's through marketing or really kind of achieving bounties and grants for certain portfolio projects as well. And so I think it's kind of a multifaceted approach, but we really essentially try and genuinely, I know it's a kind of a meme for like the VCs in crypto, but we genuinely try and add as much value as we can. And then we found that, that's the best form of advertising you can have.
Thanks. You, Jason, I think you give a very, I would say, comprehensive introduction about the investment thesis. Now, may we also understand in this current market situation, as many people say, this is a bear market. Other people say things are going to recover in 3 to 6 months. In this market condition, which area are you, looking at, and then as a focus? Specifically, anything has changed? Yeah, can you help share with us?
Yeah, so I think I won't go into like my macro views because whilst I have an economics background, I think that's something that is just so uncertain right now. I think anyone who has like a super high conviction idea of how macro in the world's going to look like over the next couple of years, I think they're just giving you their best guess, really. I think it's clear that we're in fairly uncertain times. And so how we approach that as investors is essentially to just keep doing what we do best, right? Our edge isn't as a macro fund. We're not looking to time the markets. We're looking to invest in the best founders, the best protocols we can. I would say that, generally we've had quite a lot of discipline, not only since, it's been clear that we're in a bear market, but actually since sort of right at the start of the year, when the market itself just generally looked kind of very late cycle, we've been a lot more disciplined in our investment approach, and ensuring that, we've turned down deals where we really like a team, but the valuation just doesn't really make sense for us. And so I think that's important. It's kind of, finding out what your edge is and then sticking to it. So at the moment, we're actually deploying pretty much as normal. As a business, Kronos and Woo, we're unaffected financially by any of the recent kind of ongoings in the market, which we're very grateful for, but isn't an accident. We've been very prudent with our approach generally as a company, and we reflect that kind of in our venture approach as well.
When you say that, it's your investing hasn't changed, is it the number of deals that you guys are doing, the cadence, or just total capital deployed?
I would say that in terms of number of deals and capital deployed, it probably has come down a bit slightly, but I think that's also a reflection on the market in terms of there's less activity going on generally, right? I would say when I say it's unchanged, what I kind of refer to is the thesis-driven investing, and investing in strong teams, strong founders, where we think there's like, a real product market fit. And I think that's what's super important, because that's what's given us our edge since we've been founded, is investing in those strong founders. And so that's something we'll continue to do despite market conditions.
You didn't want to talk about macro, but actually we're very interested in your macro view, especially, it comes from, someone who studied microeconomics, working in a top trading and investment firm. We'd like to hear how you see the macro is going and how this may affect the crypto market, and maybe, save us from this bearish market.
Yeah, okay. I'll delve into it personally. I'd say that, with the caveat that there's probably people with a lot stronger macro views than I have. But from a personal standpoint, I think, as I said earlier, we're in very uncertain, kind of unprecedented times. I think personally, I think the traditional markets, equities, probably still have some downside remaining, is my guess, kind of especially as like earnings and things like that are repriced going into next year. I do think that inflation is probably going to top in the next couple of months, something like that, maybe. But I think we also, in the meantime, are probably going to get a couple more fairly aggressive rate hikes. I wouldn't be surprised to see 75 bips or 100 bips from the Fed. So what does that kind of mean for crypto? I think the issue is, at the moment, we're in a macro environment where liquidity is kind of being drained out of the system, and crypto itself is very much liquidity driven. Now, when I say liquidity, I'm talking, kind of from institutional players and investors and things like that. So I think, public markets, if crypto was completely disengaged from any of the macro environment, I would say we could be fairly close to the bottom. But I think with the uncertainty, I think public markets for crypto could still face a few more months maybe of pain. And then my kind of theory in the long run was always, even if we go into a macro bear market for equities, I feel like crypto has the potential, with the amount of innovation that's going on, to really decouple from those markets. And probably not on the way down, but sort of once those markets start going sideways, I feel like it would be a good opportunity for institutions to start allocating to crypto and take advantage of that. However, I'd say with the recent ongoings, with Luna and 3AC and all the C DeFi fallout, I'd say that's probably harmed that thesis quite a bit, and we are seeing some institutions start to kind of get worried about the contagion effect and things like that. So all in all, sorry, it's not like a particularly rosy picture, but I think ultimately, when I talk about what our edge is and things like that as investors and how do you act on that in a market, as I said, my edge isn't timing the market in a macro scale. No one really knows what it's going to happen. There's so many uncertainties in the world. There's so many potential outcomes at the moment. It's ridiculous. So as an investor, it's about finding strong products that will be here for years to come, and just taking a bet on those and the founders behind them. And that's the real edge. And that's kind of like personally how I've approached my portfolio over the last few years. And it's how we kind of approach it from the venture side.
Yeah, we during this market situation, let's say from SynFutures perspective, we have seen maybe there are other protocols or projects in the same sector start to have problems, either in their product design itself that couldn't hold this market collapse, or let's say start to wind down because of poor treasury management. And then we are here for the long run, for the long term. That's why in terms of, I would say, human capital, and in terms of, I would say, monetary capital, we're pretty well prepared, to stick around for another 5 to 10 years, and see the next bull run, and offer a better product to the market when it grows again.
Absolutely.
So yeah, from our perspective, we deeply appreciate Wu and Kronos' strong backing. Appreciate that.
Likewise, and I think that's an important point as well. And so no one can really tell how long the bear market's going to last, but what this does is actually provides clarity for the market as a whole on which protocols are here for the long run, which protocols are sustainable and actually have product market fit. And so from that sense, there's actually, the market will tell you which one of those, which protocols will still be here. And so it provides a good opportunity to kind of start really narrowing down your focus and kind of identifying those opportunities. And, something I say is, like, when I joined sort of Wu and Kronos, one of the questions I asked was, what happens in a bear market? And Wu is the exact same position, very, very strong, like financially and things like that, has many years of runway without any additional revenue at all. And even, when I joined the ventures team, I asked that same question, and it's actually viewed as an opportunity, because we're under no issues financially. We can really take advantage as investors on some of the opportunities which may present themselves, which wouldn't have been possible a few months ago.
Absolutely.
Yeah, you mentioned contagion in the market with, everything that's going on with Celsius. It's affected Voyager, obviously, 3AC, and even Babel Finance, right? Do you think we've seen the worst of it, or do you think this might be just the tip of the iceberg?
I don't necessarily think whether we've seen the worst of it or not is probably, I think we might have seen the worst of it in terms of the most shocking news. I mean, I think a lot of us were caught off guard by the severity of the issues that 3AC, for example, found themselves in, and the extent to the contagion around that. I don't think it's over. I think we'll definitely see more effects of that over the coming weeks and months. Whether we've seen the worst of it, though, is probably a bit more debatable. My personal opinion is I tend to think we've seen the worst of it, although not the end of it. And I think, the next few months will kind of really identify those companies that would never have really worked in the long run, or have, had bad management or risk practices and things like that. So I think in a sense, it's kind of healthy for the market in the long run, although it's, obviously painful in the short term. And we need to be very mindful of how we kind of navigate that and ensure that, on an institutional level, we kind of minimize those risks as much as possible.
So I guess, what are you guys doing at Woo to kind of hedge risk against, further potential downside as we see kind of the rest of it play out?
Yeah, so I think from the ventures point of view, as I mentioned, it's kind of business as usual, really. We're not, we're not out there turning into a hedge fund. We kind of know our edge. It's to invest in good projects early on, right? We're not looking to become a macro hedge fund and time the market. And then as like a company as a whole, I think Woo itself is very well positioned, as I mentioned. So I think, again, it's basically business as usual. Obviously, being very conscious of risks and, business decisions. But overall, Woo is very strong as a company. And actually, we've even sort of continued to grow as a company over the last few months. And, we're still hiring, we're still expanding, and seeing good growth across the board. So I think from our point of view, we're about in as good a position that I think we could hope to be, really.
And then if we talk about this from a different angle, right? From your VC investor, from your perspective, in terms of like advice to founders, to builders in this market, let's say, what would you advise them?
Yeah, absolutely. It's a great question. I think the number one piece of advice would just be, if you're a founder and you've got a great idea and things like that, there's still investors out there that are willing to support you and take that bet on you. I mean, from our point of view as well, another kind of secondhand benefit of the current market is it really identifies those founders that are in it for the right reasons. So if you're continuing to build and innovate in the current market, then it shows you're here for the right reasons. It's the type of founder we like to see, not just those who might be like opportunistically raising in a hot market. And then for those who kind of are existing and running protocols and things like that, I would say it's draw as much support as possible from your investors. So we're still very active on the post-investment front. And actually, as it sort of quietens down on the deal front slightly, we've kind of actually spent more time on post-investment. So for our portfolio companies, they've actually even seen some benefit in that front. So it's, lean on your investors, lean on your resources. And then I guess, just ensure that you have enough runway to operate over the next couple of years, just to make sure that you never want to be in a tricky position where, you never want to be in a tricky position where you essentially become kind of like a forced seller, right? Either whether that's through equity or tokens, just because you need to raise capital and you're going to run out of runway in the next like couple of months. That's the position you want to avoid at all costs. So it's just making sure that, you know, you're kind of prudent on that side and really taking this opportunity to generate as much value from investors and advisors as possible.
What about for founders who are just now starting to explore fundraising, right? What are some ways they can navigate the current fundraising market? Given the state of the market, I mean, we've seen later stage deals getting cut in valuation, which kind of mirrors the overall growth sector, right? But for early stage founders, what can they expect as they start to have these conversations with venture capitalists? To give you an example, right before this kind of market downturn, it's pretty common to see pre-product startups raise at $30, $50 million valuation. Is this still realistic in this market? And if not, how should they approach it?
I think realistically, those type of deals are probably behind us for the foreseeable future. I actually think that a lot of private market deals haven't even fully reflected in the market conditions right now. You know, we've seen a lot of tokens go down 90, 95%, you know, some more. And yet in private markets, there's always typically a 3 to 6 month lag, but we've slowly started to see valuations come down. But I think that the good founders are actually still being kind of realistic about that, right? They're not trying to raise at those very high valuations anymore. They're looking to raise capital at like a realistic valuation and give themselves enough runway to build over the coming years. And that's kind of the important thing. I would say that generally as well, you know, I can't speak for other VCs, but for us as a fund, those were deals that we always avoided anyway, right? That those are kind of deals that never really made sense. And I think a lot of the investors who might have been caught up in those type of deals aren't necessarily the investors you want in the long run for your protocol. So it's you know, I think it's to actually have prudent investors like back you, I think is actually again, I think it's a benefit for the protocols in the long run, because again, that the investors are in it for the right reason. They're looking to support you in the long term. They're not looking for it just for to make a quick buck. So there's still investors out there who are, you know, deploying, and it's not just us. There's a lot of high quality investors still deploying, and those are the ones that you really want to look for. And I guess it kind of works the other way. Earlier I said, you know, the current market is identifying founders that are in it for the right reason. That works the opposite, where it identifies investors who are in it for the right reason also.
I just wanted to add to the fundraising part. Do you guys have like a shift in preference, like tokens versus equity?
We're fairly agnostic, I would say. Being crypto native, we do like token deals, you know, just because there's kind of a lot more flexibility around a token, and you can generate a lot of value accrual. Having said that, I think, you know, we're fairly agnostic versus equity as well. We've taken both. We've taken equity deals, token only deals, and a combination of the two. So I would say, like, ultimately that isn't too much of a concern. I think as you see more traditional VC firms come into the crypto markets, you'll see probably more equity deals, because that's what they specialize in and they're less familiar with tokens. And I think that's basically kind of what we've been seeing over the past year as well, are those kind of deals increasing. But yeah, I think generally it's not a massive factor in whether we choose to invest or not. Thanks.
So Jason, let's rewind a little bit in time. Yeah, back to the 2014. Imagine, you know, that's when you started, right? And then so today we got people with a lot of curiosity, like as newcomer to the crypto world, yeah, and they want to try some projects and explore this. So, you know, what's your advice to them? any interesting projects or like actions you would recommend them to do in this market condition?
Yeah, it's a good question. And it's actually something that, if you think about it, right, if someone who approaches crypto with knowing nothing about, it's a very difficult market to get onboarded into in the right way. So I was having a conversation about this actually the other day, where, you know, first thing you do, like if you go into these markets, you check out Twitter, you check out YouTube, right? And then to be frank, both of those mediums are filled with people just shill in their own bags, pump and dump, scams. It's really difficult. And so I think, people learn either through trial and error or through having like a mentor or a good group. And so I think that's probably my number one piece of advice is kind of crypto. The markets are kind of, especially at the moment, they're very like PvP, right? And so find a good group of people. And there's lots out there. There's lots of public groups that anyone can join, Discords and things like that. Find a good group of people and just discuss markets, and then find a group that, you can have open discussion with, ask questions, and help them kind of, approach it as a unit rather than as one person, because it's very difficult. So I think that would really be my number one piece of advice. And then my second piece of advice would just be to go on chain and just start playing with stuff. You don't need a lot of money to go on chain, especially nowadays with the alt L1s, the L2s. You don't need a lot of money to go
even
in and play around.
It's reasonable gas in terms of it, right? Yeah, I think it's reasonable now.
True.
Yeah.
I actually saw, I think today, Arbitrum was more expensive than mainnet Ethereum because of the Arbitrum Odyssey. So it's definitely, but I think now is like a great time, as you said, to kind of just go in and just play around with things, try things out, and you'll very quickly form your own idea of what's user friendly, what works, what doesn't. And then, trust those instincts, because that's kind of the experience that everyone else is having as well.
Let's look to the future a little bit. So as we come out of the bear market, right, whether that's a year from now, 2 years from now, hopefully 6 months from now, what are some sectors where you see the most promise within the Web3 space? Like, what are some verticals that excite you in this type of market?
I think it's an interesting question. I think ultimately, like DeFi is like the has a strong place in my heart. That's kind of where I see a lot of potential in the future, not just from kind of solving real world issues, etc. We've all kind of seen a lot of those arguments before, but in terms of making traditional markets more efficient in how they're traded upon, and how blockchain technology can really eliminate the middleman. And in the finance industry, there's so much there's so many people out there that act as that middleman, that really just are sort of rent takers from that cycle, where they charge a fee, and you're basically there as like the trusted middleman, whereas essentially blockchain can come in and kind of remove that, and you can still transact in a trusted way with a counterparty. So I think for me, that's kind of at the core of like what I believe in. And coming from traditional finance, I've seen like many examples of where crypto can really disrupt a lot of those industries. And so we as a fund kind of we really love kind of infrastructure plays to onboard institutions into DeFi itself. Not only for the kind of thesis that I set out, but also with having Woo Network and Kronos behind us, though DeFi is one area that we can typically add significant value to our portfolio companies. So that's kind of really our main focus. We also like kind of gamifying the metaverse, but we probably pass on like 99% of deals we come across in those areas, just because I feel like for those type projects, we're kind of in like the 2017 ETH ICO stage. That's like my personal opinion, where there's a lot of good ideas, there's a lot of promise, but then they raise, ridiculous sums with no product and not the right experience to build out on that. And so we've come across a couple of projects that are really promising. But I think kind of, when we look back in 5 years at the kind of metaverse and GameFi projects that will be leading the industry then, I think very few will kind of be the ones that you can buy at the moment, is my kind of honest, brutal opinion. But yeah, those are kind of like the core areas that we're probably looking at as a fund.
Got it. What are your, you mentioned you're very interested in the DeFi space, specifically the kind of on-ramp from institutional into DeFi. And so does that make you particularly interested in, like, let's say CDeFi, the central, DeFi with a centralized component to it?
It's a difficult question. I think it depends on what it is, right? I think there's certain parts of CDeFi which have potential, but ultimately, what I'd love to see would be kind of more institutional self-custody and things like that going forward, and use interacting in DeFi how it is meant to be used. That's kind of the ultimate goal. I think, though, we have to be realistic in the terms that, a pension fund comes in, they've heard about crypto, their investment consultant is saying, hey, you should allocate 1% of your portfolio into this. They may not have any clue where to start. And so in that sense, that's where kind of like CDeFi and even just centralized approaches initially are really useful. Where you have to be careful is obviously, we're seeing it at the moment. It's like perfect examples of like borrowing and lending CDeFi, where essentially the centralized part are people taking too many risks or are not underwriting those risks correctly. And so, out of the recent kind of meltdown in crypto, generally it's if you assess the cause of all of these issues, it's typically been a centralized source, right? It's kind of like human error or failure to manage those risks correctly. So in a sense, I think whilst it's had sort of knock-on effects, DeFi itself has kind of operated generally how you'd expect it to, especially like the blue chip DeFi protocols. So that's been something that's been really promising. And so I think CDeFi does have a place. It definitely does. But that's kind of, I view that more as like a transitional place. And then, it's not going away anytime soon, but if we reach a stage where these big institutions were self-custodying, realistically, that's probably going to take at least a decade or two. So I think in the meantime, there's definitely a use for it.
Yeah, to your point, I agree that CDeFi would be a good bridge, right, to onboard more users to DeFi, but ultimately, it's a bridge, right? So we also believe that the core value and the core innovation happen in DeFi itself, and then after a period of user growth, I think the DeFi user themselves will be sufficient enough to have a large market. Well, in fact, even you mentioned in some of the like centralized cases recently, like the potential bankruptcy of Celsius, it is specifically mentioned if you hold a Celsius offered self-custody wallet, then that money is yours. Yeah, no dispute at all. However, if you put it in a centralized custody, that's going to take some effort and time. So that's definitely the way, I think, not only for retail, but also for institutions as we gradually approach, as we gradually go forward in this through this bridge, but ultimately reach the goal of self-custody and DeFi innovation.
Yeah, definitely. And maybe like one extra point is, for like the likes of pension funds, as I mentioned, that's kind of where my experience is. it's actually in practice, it's incredibly hard for a lot of those institutions to currently self-custody. It's just, even in traditional markets, they custody through like a custodian, which is basically just a big bank that they use. And so I think there'll always be a place for kind of CDFI and centralized venues. But I think over time we'll definitely see more forays into DeFi from these big players.
Yeah, or maybe a more credible counterparty, right? Like if the banks can be allowed to do some of these business, I think that offers comfort for the institutional players to place their money at. Yeah,
definitely.
Great. So let's wrap this podcast with one outlandish kind of, give me your wildest prediction on what the world will look like in 2050 if this Web3 revolution is becomes as big as we all think it will be.
It's a great question. I think I'll do like a couple of ones. So I think, like, firstly, if you talk about like metaverse and like GameFi, it's the most cliche one in the world, but sort of that Ready Player One-esque like metaverse. I think that's like something we'd all love to like experience, right? And I think like there's actually potential to get there, but I think that's like one that a lot of people give, and it's potentially a bit less realistic. I'm not sure. I think for me personally, the way I kind of see crypto evolving over time is, I think people compare crypto to the likes of gold, right? They compare it to equities, they compare it to different risk assets. The way I see crypto, I don't view it as competing with gold, competing with equities. I view it as basically, it has the potential to disrupt every asset class in the world. And the reason I say that is because there's applications of crypto, and we're starting to see it. There's applications of crypto in basically every traditional asset class, whether that's fixed income, whether that is, tokens as a replacement for traditional stock models. We're seeing it in real estate and tokenizing real estate and shares in real estate funds, things like that. We're seeing it in the tokenization of infrastructure and making previously illiquid assets liquidly tradable. And we're also seeing it in the likes of, private debt and things like that, where, now instead of a business, it needs to raise capital. It can't necessarily go to the bank. It's too early stage. There's now many different avenues through DeFi where they can raise capital. And not only that, the general public can kind of participate as well and kind of benefit in that transaction. So I think the way I would see is basically, I don't see crypto, replacing the stock market or replacing anything. I see it basically assimilating into all of those asset classes to the point where, it's just a given that the underlying technology and crypto will be a part of all traditional asset classes around the world, as well as having its own thriving kind of token market. So I don't know if that's outlandish enough, but that's kind of the vision that I hope to see in the next couple of decades for crypto. And I do think there's a good chance that we get there.
So do you think, all asset classes, stocks, commodities, et cetera, will be tokenized to some aspect where they're all on chain in the future?
I think there's a couple of aspects. So one is tokenization, right? And making a lot of illiquid asset classes tradable more in a more liquid way. I think that's kind of that's like a simple, it's almost quite simple to do, really. Like, people are already doing that with a lot of asset classes. Pardon me. I think the more wide disruption would be, you have a company, and instead of going through an IPO, they go through a token launch. And the reason I say that is because you could essentially have non-crypto native companies looking to launch through a token. Now, obviously that's like subject to a lot of regulation, security laws. It's not really kind of possible at the moment, but I'm thinking, in a decade to once that's kind of sorted out and there's more clarity, you have a non-crypto native company launching through a token. And the reason for that is, I mean, people complain about governance tokens, right? For companies, for crypto companies. A stock, really, like, what utility do you get out of a stock? And that's coming from like a traditional investor. You gain a dividend, and you may not actually get a dividend. Apple didn't pay a dividend out for years and years. And so you kind of own basically a share in that company, that's kind of a promise of that share will be worth more in the future because the company grows and things like that. And actually, I think tokenization can really empower a lot of businesses to just add a lot of value and additional benefits to essentially their equity, and ensuring that not only are the end user more empowered from the retail and investor side, but also like they can generate a lot more utility for their business and really think outside the box from that standpoint. So as I said, I think that's probably something that's not possible now due to security regulations, but I think in the future that's something I can definitely see happening. And there's so many different applications of that and like other forms of disruption that can happen throughout traditional markets. And as one further one, as I mentioned earlier, was that kind of removal of the middleman through a lot of these markets, where currently they're illiquid because you need to rely on a fund manager or a person in the middle to do the deal for you. So you invest in the fund, they then invest in the underlying the underlying investments, wherever that may be, in whatever asset class. Whereas actually with the use of crypto, you can sort of cut that middleman out and both sides benefit, by not having to essentially pay the middleman the rent out of that transaction. I hope that answers your question. I sort of went on a bit of a ramble there, but yeah.
It does. I was personally hoping for a more dystopian answer. No, but this is a perfectly valid answer. Well, I was just going to wrap it up, but Matt, if you have something to add, feel free.
Yeah, I was going to comment on Jason's point regarding the financial disintermediation. I also come from traditional finance background, used to trade equity, etc., FX, and then do risk management. I remember the first time I read DeFi, it was about Uniswap. And to be completely honest, someone working in a financial, like in the TradFi world, would think this makes completely no financial sense. X multiplied by Y equals to K, no financial sense. But this thing just works magically, and then I had to convince myself why it works, right? Why it works? Because initially Uniswap didn't even have a token to incentivize the transaction. Think about this. Then I realized the way it works is it completely cuts out the middleman, right? So on one side is the balance sheet lender, and the other side are the traders, the transaction makers. And then there's no middleman, and the price is transparent. It just make both parties better off, and that's the magic of DeFi.
Exactly.
And Jason, to your earlier point, I think you have a very big vision, in terms of this magic is going to go into every asset class. Wow.
I
look
think
forward
so.
to that.
I hope so. That's kind of like, is that 100% guaranteed? Definitely not. But that's kind of the hope. And I think there's a lot of skeptics and like a lot of crypto natives who kind of just think that crypto will always be like this internal casino or whatever as they would call it. But I think, with this cycle, we've really seen a lot of big steps and a lot of protocols making that connection to real world assets. And I think that's kind of where I see a lot of innovation happening in the future. And I think it's kind of inevitable that will definitely be explored further, regardless of the markets. That's where I'm hoping that, we continue to see growth.
Awesome. Thanks.
Great. Well, thanks everyone for joining us. That's Jason Brannigan, investor at Wood Network. Thanks again for being here. And if you have any last words for the audience, feel free.
No, thank you very much for having me. I've really, really enjoyed it. Yeah, thank you very much, everyone.
Thanks for listening to the FutureX podcast. Subscribe on Spotify or wherever you're listening to this episode.